All right, it's Friday. Happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodity trade, and we're going to be taking a look at the setup for our final trading day this week with a little help from Mr. Brian Hoops, president of Midwest Market Solutions. He's in Springfield, Missouri. All right, Brian, I was kind of scanning over the wires, and I did not see any overnight flash export sales overnight. I don't know. I haven't seen anything for a few days now. So what's going on? Is this finally entering the depths of that big black hole in the weekly export sales for the year?
It certainly feels like it, Marlon. When China went on their lunar holiday, there was a lot of sales that week, all to unknown destinations. And it feels like that was kind of the last buying spree that China was on, and kind of disguised it as that unknown destination. Yesterday's export sales, we talked about unknown destinations buying 12 million bushels of soybeans and switching them to China. And it kind of feels like China's maybe has enough needs bought for now. So we're moving higher overnight on hot and dry weather forecasts. The Buenos Aires Grain Exchange lowered their crop ratings for soybeans by about a percentage, did increase the corn a little bit, however, and did lower the soybean crop estimates. So there's still reductions probably to be made in the overall crop size for Argentina. The question is, how much of Brazil's crop will be good or better enough to make up for that lost shortfall in Argentina. We're just way behind as far as production goes. They also said only about 4% of the soybean crop is in the fill stage. Normally it's about 14, so they're way behind their normal production areas. And also, if you look at Brazil, kind of the same situation from the standpoint, harvest has been delayed, and so there's window of opportunity to make some sales. We haven't seen anything here last week or this week as far as China buying U.S. soybeans. In fact, we did see some cancellations in that export sales report as well yesterday.
Now, I wanted to take a look at our overnight prices here with our quotes provided by Bar Chart and get your take on a couple of things. On the corn, we firmed up, and it seemed like all the action was kind of backloaded, if you will, toward the end of the Globex trading session. As we got into the morning here, things really did firm up with March corn 3.5 higher at 674.25. So that's only a couple of ticks from our high of the overnight trade. And December corn was 1.5 higher at 592. That was within a penny of its high of the overnight trade. And then if you look at the soybean market here, we were 5 higher on the nearby March. 1524.25 was the last trade there. We had July 2.5 higher. And if you look at the November new crop soybeans, they were actually down a penny as we got into the morning. 1364.25 was the last trade there. And then you get into wheat. Now in Chicago, we had a big rally with March 9.25 higher at 766.5. If you look at Kansas City wheat, look at this, 12.25 higher at 891.25 on that same March contract. And on spring wheat, we had March 7.75 higher at 925. So it looks like Kansas City has reclaimed some of that spread that it lost to Chicago here earlier this week, Brian. But I did see a Newswire report a little bit ago that I believe Moldova is now complaining that Russian missiles may have entered their airspace in their conflict with Ukraine, and maybe they're dragging another country into the quagmire there, if that's the case. Is that what's helping to prop up the wheat market a little bit overnight, that they think this thing may be spreading?
Yeah, I was going to mention that. I read a Newswire report, I think it was off of Reuters, that they said there's about 50 Russian missiles that have been fired into areas that have electrical grids across the Ukraine. And so a lot of electrical facilities and electrical grids have just been shut down completely because of the bombing. So, we're back to trading concerns about the conflict rising and how much export those two areas will be able to accomplish during this marketing season. A year ago when this conflict started, we would have been probably limit up off of this news, but the market, I think, has come to grips with we're really not increasing our exports because of the conflicts that are happening. We may get some supply issues from time to time, and that's enough to see rallies in the wheat market. But, we were down sharply yesterday. We haven't really recovered all of that today. So it's just maybe more short covering concerns about what potentially could happen down the road.
Good point. All right, we'll talk about livestock when we come back in just a moment. We're talking with Brian Hoops. We'll be right back. We're back, and we're talking with Brian Hoops of Midwest Market Solutions. All right, so let's talk about this cattle market for the time being. I know we have been in kind of rarefied air here lately, and I was kind of surprised that the cash cattle market the last couple of weeks seems to always just add a little bit to the upside, and it's always kind of slow to get going, though. Did you hear any news yesterday?
Well, Marlon, it does seem like this is going to be the third week in a row where we've had cash cattle trade occur on a Friday afternoon in the Southern Plains. So we really don't have anything to report out of the South other than the Fed Cattle Exchange sold like less than 400 head. So really not much of any type of sales. They were at 159. But we did hear some reports that there was dress trade yesterday afternoon, 254 in the north, and that would be $4 higher on a dress basis. So we'll see if the USDA confirms that today. And then also if we can get some cash trade to develop here at higher money while the market's opening up and trading during the session. Otherwise, this, like I said, this will be the third week in a row where we haven't had any trade until after the closing bell.
Yeah, it's a little bit strange here this month. Of course, February is one of those odd months anyway. Let's take a look at the live cattle and how we closed yesterday. With our quotes provided by Bar Chart, April showed last trade of 163.62. That would have been down 7 cents yesterday afternoon. June futures were down 25 cents. Meanwhile, on the feeders, this is how we wrap things up. We had April unchanged at 190.72, but you had the deferreds beyond that a little bit higher, about 25 to 30 cents higher or so. And on the lean hogs, we had the April down 75 cents at 83.32. Any penny calls this morning you want to venture out?
You know, I do think the cattle market will try and be a little bit higher off of the trade in the north. Packers seem like they are cutting kills this week. We're probably going to be under 650,000 head, maybe close to 640. That will help their margins out a little bit, but we also note that steer weights were down in the report yesterday sharply. Now we're 18 pounds less than a year ago levels, 5 pounds lower on the week. So that's very bullish in longer terms when we have a lot less supply of cattle, and now you have these cattle a lot less weights compared to a year ago. That makes for a very bullish supply situation.
Okay. Brian, thanks for joining us. Happy Friday to you, and you have a great weekend.
Yeah,
Brian
you
Hoops,
too.
he is with Midwest Market Solutions. He's in Springfield, Missouri. So there you have it. Suzanne, that's a setup for today's trade.
Interesting stuff out of Russia. You and Brian talking about that with the grains.
Yeah,
It's
yeah.
interesting.
Now we're getting Moldova in the mix. So